Hi everyone, sorry I missed the start there. I hope you're all well. Welcome to Thursday. It's the 20th of February 2025, and all my colleagues and friends and associates in Cyprus. I hope you've had a great Signal Empty. I'm not sure how many of you will be here tonight, given that it's 9 o'clock in Cyprus, and Signal Empty is eat as much meat as you can day in Cyprus. It starts at the beginning of Easter. And it's a very, very significant day for all my Cypriot friends and indeed everyone who lives in Cyprus. It's a great event. It's a great day. Cypriot men, I think, are born with the ability to grill like nobody else in the world. But anyway, hope you're all well. It's been a horrible day here. The weather in London. I've had a really been up in town at some hospital appointments with my grandson, but that's part of being a good grandparent, I suppose. So yeah, interesting day. As ever, there's always something going on. Our trades from last night, we had a complete hit across the board. It was, I think, the euro. I think we were short euro dollar, and it went the complete opposite direction. But out of 8 or 9 trades, I think we've had a blockbuster day. We'll more on that later. But really, pretty steady data today. The most important data was the initial jobs claims came in still under 220,000, a bit higher than expected, but 219,000. It's still a very, very hot jobs market. Dollar's being clobbered today. Stock markets have fallen. Gold's hit a new all-time high. Bitcoin has burst into life a tad as well over the last couple of days. More on that, as we say, as we go through the charts. Oil continues to ramp high with some two nice trades. We've got an oil open at the moment. The inventories at 5 o'clock helped as well. It was they were higher than expected. A build of crude inventory down in Cushing in Oklahoma. 4.6 million, 0.33 million barrels compared to 4 million last month, but an expected decline of nearly a million didn't come home to roost. It was only 100,000. So oil on the bid, following obviously Tuesday's meeting with the Saudis, the Russians, and the Americans. Unbelievable stuff. But and then the Trump's and Zelensky's tat for tat words is just unbelievable. What a complete 180-degree move by the Americans. Anyway, we'll see how all that pans out. Europe and Ukraine being very much sidelined in what Trump seems to be doing or trying to do with Putin's regime. Earlier in the day, we'd had jobs out of the US, not out of the US, out of Australia, which was much better than expected. 444,000 last month was upgraded to 60,000. We were on expecting about 20,000. Unemployment rate remained actually ticked up, but in line with expectations, so no particular worry there. Inline data out of Germany, so the claims inflation looking to cool from the producers in Germany, but we'll some very mild stick, so more argument that disinflation is kicking around in Europe, but the ECB still on path for 3%. 2% cuts by 2% rate by the end of the year. As I say, what was I saying? Initial claims was the really big news, but we've had some major moves in our markets. We'll go through the trades we talked about last night, and I'll explain again on those my scalping end of day trades, the ones that I tend to get out of manually. Well, again, we'll talk about that when we look at the charts. So let's move on. Any questions, anybody, as we get started? Steele, please tick it in the box. Feel free if you want. Don't put this up on Instagram simply because the screen is a bit compressed, but if you'd rather follow us on Instagram and on X or Twitter, please let me know how that goes. I got a whiff of Signal Empty in Cyprus and from years ago, the smell of the pork fat. Anyway, let's crack on. Let's bring up the chart. Enough reminiscing about Cypriot food. And we're actually going there next week, so I'll get some fill of that later next week. So here we are. So new all-time high for gold. What can I say? The market keeps trending higher. This is a 4-hour chart, daily chart. remains bid. We had a bit of a hiccup, but really that was on Friday the 14th. Money being banked. What was going to happen over the weekend? Higher Monday. Nice strong breakout on Tuesday. I don't know if I've said this on these videos before. I think I must have done. I say it plenty of times. But my analysis of looking at these gold charts generally, but gold charts in particular, it's a bit of a I haven't actually drilled down and actually done it systematically, but I get this, feeling my water over time, that Fridays and Tuesdays can be some of the most volatile days, either positive or negative for the gold market. Fridays, you'd understand for risk on or risk off for the weekend ahead about particularly news flow, but Tuesdays again can be good days for gold. It's just one of those things I've noticed over the years, staring at charts and the gold chart in particular. But new all-time high today, 29.54.87 here on our charts. I'll round about that. So 29.50 has been breached, and off we go still. So again, as I say all the time, what do I say? I say stay on your surfboard until you get wobbled out. Some might have got taken out here on Friday. This is a really good example of your continuation trade or your continuation position. Is it still prop trade on today? It's such a miserable. Yesterday I was saying how nice and blue sky it was. I felt quite positive. Today it's been grey, it's been wet, it's been miserable. I've been sat around in hospitals, but there you go. That's such is life. February in London. So that would have been if you're trading this, as a continuation trade or a higher time frame gold trade. That would have been a reason to get back in here on Tuesday's close, because we closed above the resistance we'd had last week on an end of day basis. Obviously the intraday spike we'd had earlier in the week and on Friday was higher than that, but it was a positive candle. Closing above and obviously significantly above the close we'd had on Friday. So up Monday, up Tuesday, sideways yesterday, and we're up again currently today. Obviously today isn't over, but gold continues to be big. Do let me know how you're trading, what you're doing, what your ideas are, or if you're in and out in minutes. If you're a long-term holder, you trade the 4-hour candles, let me know. We'll do it that way around if you want. So gold bid. Let's start at the top. Crypto's come back to life, as I said, in the last couple of days. Bitcoin, 98,270 at the moment, 98,270. So it's coming back to life. It's still very moribund here. Moribund's the wrong word. Sideways action, but I think I said this earlier in the week. I can't remember if it was. I can't remember where it was, sorry. But the weekly candle was positive last week from the big indecisive start to February following the shakeout from inauguration. It's something like 30 days, isn't it? 20th, there we are, 20th of January, inauguration day, 20th of February, 30 days of the Donald being back in the White House. And what a 30 days it's been. Oh my God. Oh my word. So crypto fans, I know a lot of you have been getting a bit concerned about it's not going anywhere, but we've got this consolidation at highs, this sideways action. Remember, my friends, the longer we go sideways, the bigger the break to one direction, and this is still biased to the upside. Remember, this is the weekly chart we're just looking at here. So huge, big down week from the all-time high the week before there at the end of January. A big indecisive week, but a lower week the first week of February. That was all taken out last week, and so we're higher this week so far. So you can see here we're still looking relatively positive here on this. Well, I mean, it only goes back to October 23. This chart here on our trade locker platform, but you just be patient. The 100,000 is going to be taken out. I'm pretty sure, but again, it doesn't really matter what I think. Trade what you see and follow your rules is the key thing. So good day yesterday and a better day today, basically. So a 98,300 currently. So Bitcoin having a good Wednesday, Thursday. Let's see how Friday feels. Back over 50 basically on here on the RSI, and the MACD here on this daily candle is looking for a cross here on the signal lines. The histogram turning green again, so it could be a significant turn. Potentially could not be as well, but it could be a turn today. So watch where we close today. A break obviously over this 50-hour day moving average is what I'm looking for, 99,000. And see where we go if that does happen and we break, nicely, and then 100,000 goes out and we start to move up. Equally, we bounce off here and we move back down to perhaps test again the 92,000 level. But we haven't done that since the first couple of days of the month itself. The third it was, wasn't it? Yeah, third, where we went under 92,000. So let's see. Obviously, it's the 20th. We've still got a full week of February still to go. So Bitcoin, better couple of days, but still rally sideways. Actually, no big trend change, no trending entry for me on that one. Let me get rid of the order panel. I know on that. So that was crypto. Energies, we'll come to in more detail, but we were long both UK oil and US oil. I don't know if I marked it on. The US, it was from my trading platform. The data was different, wasn't it? That's what we were saying the other day. But we were long UK oil and US oil. I don't know if I marked this up. No, but yeah, you can see we've had a pretty positive day. So I'm getting a message here. No, I'm not. Thought it was. Yeah. So there we go. Oil. Well, actually, let me just run through the charts and then we'll come to the trades that we talked about. These were one of our trades. We got oil, both Brent and UK. I think I put Brent up, didn't I? I put them both up. I can't remember. Where were we? That's general chat was on my. It's in the trading strategy. All the end of day trades, guys. So here in the trading strategies. These strategies here. So yeah, UK oil not set. That was from 75.48, and I think we took US oil last night 72.08, and T1 was taken out 73.23. Actually, should we do this now? Let's actually no. Let's go through the markets and we'll come back to the actual trades themselves. So, as I said, oil's better. Gold's had all-time high. So oil continues to track high. We'll come back to the actual trades in a minute. And the majors, you can see the dollar's being hammered today. So pick anyone. We'll go through the majors. The Aussie, which we are still long from. Quite a while ago now, the 5th of February. Was it 5th of February? Was that long ago? Yeah, it must have been. Yeah, I think it obviously was. We hit target 1 here. Is this target 1? I think this is target 1 here. Yeah. Whenever it was, the 14th, last Friday. Was this? Or was that? Hang on. Yes, so we got in here. Yes, it was the 5th of February, and then went sideways, went against us for a while here, and a positive day, but again, tested that low again, 63.25. Sorry, 63.33 on the 12th, and then we've run away from since then. So we got to target 1. Our stop loss was dragged up a while ago. Good job I didn't move it. I was going to move it the other day, but it still sat down. I'll probably leave it there. Currently at 63.23, but I might take some of it. There's still half of the position still on, so I might take some of that off. It's Friday tomorrow, obviously, isn't it? As we're back to 64, so we're right at 64 for the Aussie, so we're in the money on that one nicely. But again, the trend is still running. RSI is rising. Don't panic. There's no reason to get shifted. Shaken out of that. I'm certainly not going to move too much to take a position out. Indeed, if this candle finishes like that, I might be inclined to actually add if we break above 64. But anyway, we'll see. I'll let you know as the days roll on. But it's Thursday. Just trying to bag some pips, given we had such a rubbish week last week. But we've turned around that from last night. But we'll show you that data. Dollar CAD back under 142. Today we had 3 days up, Monday, Tuesday, Wednesday. It's turned around today. Let me zoom that up. Oops, too much. As you can see, it's taken out. Then today's action has taken out all of yesterday's uptick. So we're back to this flat area under 142. So that's the key area. So we reversed, and it's it's been short here from the 4th again, a bit like the Kiwi. We haven't actually taken this trade on our site here, but trading lower. So it's a weaker dollar day today. Swissy has moved really significantly as well today. Big engulfing candle today, taking out virtual 3 days of action, of bounce action. So positive for the first 3 days of the week, turned around and closed below the low we got to on Monday at 89.70 would be significant. You can see if we zoom this in, you see what a significant level that is. Support area, this 89 dot 89, sorry, dot 90 round number, and the this low here of zoom that out. Yeah, this low on that day there on Monday of 89.70 was a resistance area here as we were ramping up nicely. So leg up, retraced, leg up, stalled around where we are now as support, leg up, retraced into where we are now. The three, the W shape, up, down, up, down. So a break of here, and we could start to move down. Remember, markets go down much more quickly than they go up. So watch that one as well. But again, a strong day for the Swiss franc on a weaker dollar. Dollar yen, what under the hugely psychological 150 today. So another down day. Remember, we talked about this for weeks. Again, we've been short here, or take short positions here. I think I actually went long on one of the triggered long, didn't I think earlier? But oh no, so there we are. Still short on this one. So didn't take us out up here. We are short from the 17th on our trade locker platform, but it's been under the 20-day moving average. We briefly closed there, and the turnaround was here, and this was the confirmation when we got in here on the 17th, the break under the 152, and now we are 200 pips to the downside, and just a huge down day today. I know T1 was taken out today, but 50% closed, but still another 50% on to 149.72. And again, it's still not oversold as far as RSI is concerned, so there still be some down move, but we have breached the hugely psychological 150 level. Why is 150 so important? It's because it's got 5s and 0s in it. I know that sounds really flippant and just, but that's what happens, and hopefully you can see what this chart just backs me up on that. Huge down leg here, massive down day here back in July, at the end of July 2024. And where did it stop? 150. Where did it stall? Coming back up for 4 or 5 days, for 1, 2, 3, 4, 5 days before it broke through it here in October. 150 support here, 150, 1, 2, 3, 4, 5, 6 days. Come down into its support, so we bounced off it again. So again, lots of money being taken off the table at that 150 level. Have we got some more legs to move it down? As you can see here, we did spike to this level. We've got on here this 148.64. It might be a bit of an extension level, but again, I might just taking some of that profit that's been offered today off the table. Kiwi 57.60 to the upside. We were long this, weren't we? From we were short this. I can't remember. No, we were short, and it stopped us out. Must have done. It says entry here, the 17th T1. So we were looking to go short that. That has not worked out. 17. That's the 5th. So we were 17th. I haven't marked that on as a horizontal line on. So where's the 17th? It was it that day? Was it that day there? Can't, because the entry says it's. Oh, well, anyway, I'll check what the results are. But anyway, that can't be, can it? Those lines are just down there. Anyway, moving up against the weaker dollar this week, 57.60, as I said, to the upside. Euro, we were short this last night, and it's bit us in the bum. here, but that was on the shorter time frame on the scalping one, because I had to go out early this morning. I didn't check that before I went, and it's hit the what is termed a catastrophic loss. So they don't normally hit the stop losses that I set on the scalping trades. Sorry, let me just go back to show you what I'm talking about. Sorry. So last night, the scalping end of day, we were short from 104.24.2. We were looking for 104.70. That's long, not short. Oh no, the stop loss was there. Sorry, 103.76. So 60 odd pips we were looking for. So 104.70. So that's a 30 odd pip stop. Relatively big on these tight ones, but that was the only losing trade from last night's major movers. Yeah, more on those tonight later on. In a couple of hours, I'll be posting more for tonight's move. So yeah, euro back, but obviously huge resistance at 105. Bit over 150 for dollar yen, 125 for cable dollar against the Swiss against the UK pound. 105 a key psychological and technical level, as you can see here. This big thick yellow line here. We can see that. Where we bounced, boing, bounced. Then it was 106, wasn't it? It didn't happen, and we've not been above 105 on an end of day basis in 2025, and indeed we were last over 105 on an end of day basis on the 16th of December 2024 for euro. So. But remember here we're talking about parity. Many are still talking parity, but perhaps not with as much vigor as they were. So dollar weakening significantly. Well, significantly certainly has today. And see what Trump has to say. As I say, he hasn't had a lot to say about the currency and the stock markets just yet. He loves to get involved. There was a big interview with Scott Besson, the guy they're calling the old, not the old man in the room, but the sensible head in the room, the new Treasury Secretary taken over from Mrs. Yellen, and he's very much a Trump acolyte. Big, quite interesting. Again, a bit like Trump. He's given quite a lot away to with an interview with Bloomberg earlier on today. I didn't see it live. I was out most of the day, but yeah, talking the talk. Russian sanctions on the table, blah blah blah. Talking directly with Russia, no qualms for that. But yeah, unbelievable stuff. Hammered the dollar today. And finally, cable 126.50 has been breached today. Another strong day, perhaps not as big as some of the others we've seen, but 2 days of weakness back on UK data. It's been taken out and we're back up. But again, it's another one that's been long here on this crossing 21.5 EMA strategy, tentatively from the 11th, but certainly the break of the 50-day here on the 13th last Thursday, and off we go. So we've been up for a week, and 26.50, 21.27 is the next line in the sand for cable to the upside. But again, that could be turned around quite easily. But technically, it's nicely rising. We've got a rising RSI. We're back over the 50. We're rising nicely. It's across on the MACD all the way back here. On the 20th of January, another month away, inauguration day, remember? And off we go. The first 30 days of Trump 2. Oh, my word. Oh, my word. I suppose it only means there's, 3 years and 11 months to go. Obviously, he wants the Nobel Peace Prize, doesn't he? That's the big thing. So, who would have thought, eh? Donald J. Trump. So off we go. Weaker dollar today. It's helped our positions all the way down. Indices also weaker today. Let's start with the Dow. Big down day at the moment. We are down. Wherever we are, 44,076 or 44,000 is calling. There's our short that we went short there on the 18th. So wasn't really expecting that sort of move, but we'll take it, won't we? Conversely, the DAX, as we saw yesterday, all-time high early yesterday at this 22,950, but a huge down day yesterday. We're coming out of overbought finally here, having broken into the overbought area on the 16th of January. So little over a month in an overbought condition, but trending higher. This is, the oscillators saying, no, it's sell. We got as high as 84. This is the sort of thing I'll be interested in. How overbought did we get? 84.1. I mean, it's a long time since the DAX has been in any of that situation as far as the RSI default standard is concerned. MACD continuing to support the rally, big green, positive green histograms here. Turned around, shallow green yesterday on the short, a weaker day today, and looked like we're crossing here. So again, potentially triggering some short-term short positions. Certainly the long positions have been closed on the DAX. Euro Stoxx very similar. Obviously, DAX more obviously Germany, just Euro Stoxx across the wider European stocks. The yen, not the yen, the Nikkei again, another one we were long this. Oh, again, I can't remember if we still. No, we closed out, didn't we? We took us. It was back the 12. We were looking to go long, weren't we? And we were in the money. Now we ended up out of the money, and we closed out 2 positions on that one. But again, big down day yesterday, and a more significant down day today. 1.5%. The Nikkei was down. Nasdaq 22 back to 22,000. So again, a classic lack of energy at the top here for Monday, Tuesday, Wednesday. Not going absolutely anyway. Screaming final top. Well, there hasn't been an execution. There hasn't been a exasperation peak. There hasn't been a parabolic rise up, but as you can see, consolidation at the top is positive. We've got to the end of earnings season. We've just ran out of steam, ran out of energy. Some big moves today. Walmart's down 6.4%. Palantir, another darling recently, another very interesting character, let's call it that runs things. 8.9%. JP Morgan off 4%. Citibank off 3%. So big moves today in the stock market for those key stocks. Obviously, none of those actually. Palantir's on Nasdaq. The others are not, obviously. But anyway, you get the point. So people were still hanging on. The 20-day is still down here at 21,800. Is it just a cooling of this consolidation? It still is. I mean, there's nothing to really shout about panicking there. Could probably do with another retrace, cooling out, see where we're going. But they say the main energy from the earnings data has come into an end now. So yeah, that's that daily trend line we breached to the upside. So we could see some consolidation back to this sort of zone here for the Nasdaq. S&P 500 still holding the key 6,100 level, but again, big down day today. Don't panic too much. It's still holding. This consolidation area at the top is still holding high. There's obviously been rotation into other stocks. The peace dividend, if there is one in Ukraine, will benefit the Europeans more than perhaps the Americans. But we'll see. I mean, it's a long way from that as well. So we'll see what goes. Obviously, Victory in Europe Day, Russian Independence Day, May the 9th. It's what Putin might be having his eye on, but he must be laughing his way back to the Kremlin, Mr. Putin. So anyway, FTSE 8,660, another 2 down legs there. So we're back under this key 8,700 level for the FTSE, rolling over, and that's it, isn't it? That's the lot. Metals, we had a look at gold before. So let's have a quick run through our open positions last night. So we were Aussie yen, we were short. Actually, I'm going to, I'll leave that on there so I can flick between the two. Let's just go there. So start with all the crosses. So Aussie yen, JPY. I won't run the actual details, but you get the point. We've got a good day today. So we were short here last night. It's been smack down to T1, and half of that's been taken out, so that remains short to the downside. So that's a winning trade. I'll update the actual numbers later on. Okay, CAD yen was also short last night. Where's my? There we are. CAD yen. That was short from last night's area. The actual the price we got in I'll say I'll show it, but again, T1's been hit quite nicely, so 50% still on that. We can't be looking for an extended. I mean, the recent low here on the for this pair was the month of February low, 104 900 basically, or at 105 600. So potentially still 600 moves on that. But next target really will be the close from this date here. The 10th, and that intraday then extension takes to 105.15, 105.30 is the next downside level, which we'd already hit today. So we'll see, we'll bounce a wee bit off that. So, but again, another one in profit. Thanks very much. We added to our Swiss yen short from the earlier in the week. We were looking at from 167.43 last night. So it's heavy yen, but I mean, it's all gone our way. So nice day. Doesn't always happen like that, obviously. Sorry, I want Swiss yen. So again, that was our 167.90 earlier yesterday. We've added to our position. This is our position from earlier. It wasn't from all the way back in the 29th, was it? No, I'm sure it wasn't. I'm sure it was around here somewhere. But anyway, yesterday's in the money. Target one taken out. It's bounced again back. Yen's come back to life, having hit this extended recent low. So that's I'll probably close that out completely later on the move down, give us messiness here potentially. But anyway, again, as I say, I'll update you all on the Swiss yen situation later. Next one. So it's 3 winners in a row. Euro Oz was short, and Euro yen also short. Short, yeah, it was a lot of. So if I just put in JPY, that'll bring up all the ones I want at Euro yen. Now you're going to see the same story. I mean, the risk of this approach, guys, obviously, is that you know you're heavily in trades that are all involving the yen. So it goes against you. You lose quite significantly, or you can lose quite significantly as well. But because I trust my system trades, you've got to take it's a mechanical, straightforward system. I tweaked over the years, but I know it's successful year after year, not necessarily day after day, but certainly year after year, week after week. And I do occasionally still have losing months, but you've got to take them all. So you reduce, as I said last night, money management and risk management is key. So your money management rules come in, you reduce the actual positions on each of when you've got a major exposure to the yen, like we did last night. But even so, overall, it's a huge percentage move and pip gain today for dollar. The yen crosses that we've had. So euro yen also short and in the money. Pound yen. Oh, just getting a bit boring, this, isn't it? Anyway, you get the point. The yen's had a weak day. We were really exposed right across the board, so it could have gone against us. But as I said here, due to the number of new trades and current positions open, my risk and money management rules means volumes vary significantly from asset to asset. I'll update all positions and results later tomorrow, and that's what I'll do later tomorrow. So these are all winning trades. Pound yen, Kiwi yen. Let's just finish them all off. We're having a bit of me too moment. There we are. Yesterday's entry target. Down we go again, and Kiwi's the same. Kiwi's less so, but still in the money. I'm sure that's hit target as well. I have to double check that later. So all very coordinated, but all quite positive. Thanks very much. Okay. The other one was the yen, the Nikkei, which we've taken out at 38,600. Let me just go back to the Nikkei, and we'll go back to the So what did we say that was? Yeah, that was target 138,600. Yeah, so that's 700, 600 down here somewhere, isn't it? Yeah, we're at 5, so that's taken out. Nice big hefty point numbers, obviously for when you're trading a Nikkei, but percentage wise, because the risk is obviously equal to other smaller point moves from a risk and money management point of view. It's still a significant move and a positive winning trade for the yen key Nikkei, and it's still obviously half of that's closed and it's still open. The one that we still remember from the other night, we were long UKR and we haven't got a target set, so we're just trailing our stop loss up there. And same with the US 30. And these are all these other shorts from earlier in the week. The Swiss yen, this Aussie Swiss, I'm not sure about that one. Euro CAD, some of these were losing. I haven't actually updated these, have I? No, I normally put the what has happened. I'll update all of these later on, whether it's today or tomorrow. I might do it tomorrow morning, to be honest. It's just a bit of a manual exercise, cutting and pasting from my trading platform, trading workstation. But basically, yeah, so US oil, we've taken half the position off. The UK oil long, we're just trailing the stop loss up. This one here, not set, and the short on the Dow is not set. So 44,900 was our stop loss. But again, we're going to grab all of that. See how we bounce and close on the day. So a great, having had a miserable week last week, 260 odd pips loss. We had a fantastic night last night. The risk was obviously quite high given the exposure to the yen, but hopefully everybody understood what I was writing here. We reduced our exposure, but it's good for obviously the win rate on our trades. But that isn't what all trading's about. It's about it's all the whole combination, not just your win rate. It's how many points and pips you're making, your percentage gains, number of winners compared to the number of losers, and staying calm and even-headed when you're winning and when you're losing, treating both those imposters as the same as my dear old mum, God bless her, would say. So it's 22 8. I've been talking for 40 minutes, and I think we are done, unless anybody else has got something they want to add. Tomorrow, I'm scheduled to be with you 1:30, I think it is tomorrow, for ahead of the. Why isn't it showing you all? Oh, that's why. It's PMI days. It starts tonight in Australia. Why isn't that showing you that? I haven't got the Aussie PMI data. Anyway, they are. It's not here. In the UK, we've got retail sales tomorrow morning, close to the Brits love to shop. So retail sales have been very weak. Expected to be moribund data for January, but so there could be a surprise to the upside. But look at this change in the data. Obviously, it's the key December, January data coming out, but some big numbers there, and then it's PMI manufacturing day. Remember, PMIs are important because they're forward-looking data. It's not looking back. So a nice round off for the week. Retail sales out of Canada as well tomorrow. PMI, the key PMIs at the United States are the S&P ones tomorrow. Services and composite and manufacturing ones. Tomorrow, University of Michigan consumer sentiment and inflation expectations also tomorrow. See how the consumer is holding up. Expected to feel a bit duller. Obviously, the inflation, the current administration blame it on the previous administration, but still confident when they're in their announcements. Bessent was saying as much on Bloomberg that there will be not inflationary. These policies of the new administration. We are going to cut government spending. The DOD cuts run into trillions at sea. actually what actually comes, how much of it is actually delivered, and indeed whether they're going to be inflationary, disinflation, or absolutely no impact whatsoever. But it's all political games. Big announcements in the Senate tonight. Republicans will get through their bill, but the Democrats are going to talk it out through the night and trying to get some tweaks and changes to it. So yeah, we'll see that. And the other thing I wanted to show you tonight was the react. Obviously, yesterday's Fed non-event, and the final impact has been a bit of a cooling. Yesterday, the expectations were 41.57 for a cut by July. So it's now 60% chance by the July meeting. So nothing from March, May, or June. So the next 3 meetings from the Fed, no chance of a move. Many are saying there's not going to be any cuts this year. The futures market, currently the market is still expecting a 60% chance of a cut by June. The July meeting at the moment, and only a 37.6% chance of the rates being unchanged towards the middle of the summer. By the end of middle of September, obviously we're well into looking towards year end, the final 4 months of the year. Only a 25% chance the market is now expecting of no rate cuts. So the market is still looking at 1 or even 2 rate cuts for 2025. But see how it all pans out. Obviously, we'd have had 9 months of Donald Trump in the White House by then. So there we go. Let me leave you with today's chart of the day. I think it's got to go to our favorite, everyone's favorite indicator and favorite asset, which is Mr. Gold, new all-time high. It's at 29.54, remains bid. Stay on, friends. Remember, if you want to join us, hopefully you are with us. If you've not joined us, our challenges are very open and easy to understand. We are the grown-ups in the room in this burgeoning prop trade business. Standard approach is a two-step approach, two-phase approach. Some people want to do the one-step challenge, the express challenge. Others with a bit more experience look at the pro challenge. But most of our clients are looking at a standard approach. And remember, you can get a $50,000 account or for less than £350, and $350. At the moment, we have a 25% discount coupon available. It was welcome. New. 25 still works, I think, or code still works, I think. Yes. So that's this $345 brings that down to $260. If you 25,000 is that's a nice one as well to be playing with, especially if you're relatively new. But remember, you can then go on, get the funded challenge, you pass the two-step challenge, stick to the rules, which again, that's one of the things I love about the prop trade business and the prop trade .com in particular. As it says here, you can go straight for a $200,000 one if you want, but the $25,000 one, works really well. $175 brings it down to about $130 with 25% off. So come and join us. If you're not, why not? I'm here to help you be successful, because if you're successful, you tell your friends about us, and more to the merrier. If you're an affiliate, if you're a partner, have a look at our partnership program as well. It's very, very attractive. But anyway, end of the advert. Join me tomorrow for at lunchtime tomorrow. I think I'm blathering on here because I can't remember what time it is. Yeah, I'm sure it's lunchtime tomorrow. Yes, and we'll wrap up the week and see how many picks we've got in the bag for this third week of February. So thank you, everybody. Stay care, and if you're full of pork in Cyprus, go and have a good night's sleep. Take care, everyone. All the best. Bye-bye.